looking at the market, finding the best trading opportunities and understanding what the industry is doing from both a historical perspective and really a technical perspective of where they stand today. The one guiding us through is Gary Glover. Good morning, Gary. How are you?
Yeah, well, good, Chris.
So looking at the market, as we have been doing, you've got your portfolio, you run for your clients as well, and then the indices, but I have been working within this channel, and it has sort of, the last couple of weeks, you've noted there have been some distribution days in the US indices, but then larger down days on larger volume. What's the update that we have now for the US indices and how you're seeing them, where they currently stand?
Yes, I think actually last night, Chris, was the 5th distribution day for the last few weeks. So I was just talking to a client this morning about distribution days because they were sort of quizzing me on it. So I was sort of like, I've got it written on my board here. So distribution day is a significant decline in a major stock index in higher volume than was seen in the previous session. So IBD, obviously, who come up with this sort of William O'Neill, is a significant decline. It was a drop of more than 0.2%. Allowed, and basically looking at for the volume to be greater than the previous session. So like last night, I think most indices were off between 0.35 and 0.4% down, and the volume was higher than the previous day's volume, the previous down before that. So that is a distribution day here. So according to what I'm looking at there, I've seen sort of 5 here. I'm just reading through some of the old RMD. They're sort of saying 4 or 5 distribution days over several weeks nearly always signal that the stocks have topped and are heading for a downturn. So I don't know about that. That's their commentary there, but I have found it a pretty good guide. So I don't, when we haven't seen many distribution days at all the way up. So this is the first time I've seen them. So I'm sure there's failures there. But we've now got a cluster of 4 or 5 across the 3 indices there over the last 2 or 3 weeks. So, so that is a bit of a negative sign there normally. So we have hit the top of the band as well. So we're basically hitting that upper channel band. And we are actually 144 calendar days from the low, Chris, as well, which is equities often sort of run a 90 sort of day or half, like a quarter year or half year, or say 180 sort of cycle. Usually commodities run a lot of the 144 cycles. So it does, sometimes stocks can do that as well. So it's just interesting here. We're sort of 144 calendar days up at the top of the band. We've got 5 distribution days here now for a lot of the indices. And we've also hit a bit of an equinox there, which sort of can be hit and miss the equinox. Through 20, I think it was 18 or 21 there, we had, we got a turn on all of them. But in the recent years, we haven't had much of a turn at all. You might only have a 2 or 3 day turn, or maybe 3 or 4 days, and then, but they can be turning points of importance there. So they've just got a bit of a cluster of potential sort of sell, or sort of turning points here. So yeah, look, I have put a little bit of a short on there. But look, if the industry closes above that high, I'll be straight out here, because this market does have some momentum. Been pretty strong here so far. Been really strong actually. So we don't want to fight the tape here, but yeah, just there's enough signs there to me that potentially I might see a bit of a turn. I'm not expecting a massive correction there, Chris. I just think oftentimes when you break out to a new high, break out of an old high there, you can run for say maybe 5 or 8 weeks and stuff there, and then you come back and retest the old high there. So we've run pretty high here. So I still think we can probably see a bit of a pullback there as well. So I saw some seasonal guys talking about every time markets been up January, February, March, then the first 3 months of the year being up every month. And normally they have a pullback into May, and then they finish the rest of the year pretty buoyant again. I think 20 out of 21 finished the year positive. Most of them had a little drawdown in that April-May window, but finished strong there. So not all of them had a drawdown, but just looking at sort of seasonal sort of stuff here. So I just think we're probably a bit of a pullback here. Love to see it come back, maybe something like 6 to 8% or something like that. Sit on top of the old high, sort of build again, and then then run the rest of the year out there. And it's just been pretty strong here. So feels like everyone's getting a bit complacent. So I'm struggling to see too much that I really like here. So there's a few, but not that many. So yeah.
So that's definitely what you've seen across the US indices, and a lot of correlation across them clearly. And you're talking about some bearish positions you put on with some hard and fast stops. The Aussie market, a little bit different, quite wide. So if you look at this weekly chart that I've been reviewing for some time now, so that there was a bit of a tight compression under the high that we discussed a few weeks ago, broke out and got above it. These are fairly wide ranges that we throw back. How do you interpret those, and what's happening with the volume for the Aussie?
Yeah, look, it's just been messy the whole way through here, really. So, like I say, not normally on the fourth attempt to go through, but I think we had 5 attempts before we broke the top there, and then we flushed back below it and then moved up here. I mean, the last couple of weeks we had the pretty heavy down week, pretty heavy volume, and last week we had a bit of a bounce, and the volume was light again. So, that's not showing a super conviction there for something which is sort of broken out here. So, so I'm a little bit neutral there. On the daily there, you do have a little bit of a rising wedge as well on there. So it just kind of has me a little bit concerned here. But again, I'd probably just love to see it when we come back to 7,400. Sort of, I don't think it's going to come back too much deeper than that. And then probably reset there, because it has been pretty messy. It has been overlapping here. It might continue to be messing here. So yeah, it might be better off just to look at the sectors, then sort of trade the individual index there. It's been pretty messy so far. I think the sectors have been a little more interesting.
All right, well, if we move beyond the sectors and try and find some opportunities within the markets themselves, looking beyond the indices, companies that make up indices, and starting off at the larger end of town, Woolworths, you've spoken about that a couple of times in the last few weeks, really about coming back significantly from its highs. So reasonable size move for a large cap company where the market's actually been going higher. So what's happened here, and what are sort of what are these critical levels, and what do they mean to you?
Yeah, so it actually it hasn't made a false break there, unfortunately, Chris, but it has come back exactly to the last low there. So yeah, we have sort of hit that last level there. So I think it's 31.67 was the October 22 low, and we've basically hit it right on the dot as well here. So yeah, just seeing that sort of cluster of volume there as well. So stocks are sort of 20% here off at sort of highs there. So fairly big fall for what's pretty sort of bellwether sort of safe sort of stock. And it's off on a lot of innuendo rather than anything sort of fundamental, I guess you might say. And I think, realistically, any changes that might occur within the supermarket industry, they're probably years away. Even if the government wanted to make change or industry want to make changes there, I think, it's just going to be difficult, just to find land. I mean, to find, so I can't really see Aldi sort of growing too much faster, or net cash growing, too much bigger here. I mean, Coles and Woolies got 65% sort of footprint there. So, we'd be relying on a new competitor coming in. I just don't think it's as easy as that. So yeah, I don't think much is going to change personally. So I think there's some value here. I think the stocks definitely, that volume there is sort of showing signs of accumulation for me. So I think it's a pretty interesting level here. So I did have a little bit of a tight stop here last week. It sort of stopped out, so I just looked to reset that, and I'll just put my stop just under the low here as well. So I do like that one here.
Okay, well, the next one's Sonic Healthcare. It's still a reasonably sized company, and one you've looked at before. We've got these movements coming down. You've got this huge range of the large drop, $47 down towards $27, and getting to new lows in just the last week.
Yeah.
We should be quite interested in what's happening with this particular candle here on high volume and the specifics of how that candle looks.
Yeah, there's actually, I looked at, I actually like this. I really like this actually here on this. couple of reasons. Obviously, I look for these false breaks. I like to sort of see stock go to a new low and then sort of fail. So after they sort of, I'll cut through to a new low and reverse, and then you get you get volume come in, and then you get a bullish reversal and bullish close in, and you can get a sort of fast move coming from there. So that's always a signal I do look for, some of these sort of heavyweight stocks. But when I was looking at the ranges and stuff here as well, something really jumped out at me as well is that you can see here that if we look at that low and project it out here, that the last leg down there from around April 23, that's exactly 50% of the weekly range. And I see this all the time with indices, is that oftentimes when you've been building, and then all of a sudden you have this last leg up, the last leg up is often 50% of the entire weekly range, and it comes, so you might have 100 weeks. The last 20 weeks can be 50% of the range. So you build, and then get the big flush at the end here. So same thing happening with stocks here into the low here. The last part of the range can be 50% of the whole move. So it's a big thing sort of for looking at, if you sort of study the Fibonacci and technicals, you often see this, particularly the 50% is a pretty important level there. So just seeing big volume there, sort of possible accumulation down the low here, false break, and we've got, just some really, really strong geometry through there as well. And even if you look at the other levels as well here, we can see that even the 3/4 of the range was important on the way down as well. So we've sort of got a few bounces off that level. So just, some really nice geometry there for this low here at the moment there. So, I think it looks pretty interesting. I do like the healthcare sector. I think, Sonic's obviously one of the bigger players in there. And, I think the long game there is definitely some value here for Sonic there. It was probably only a small miss there, really. The revenue line was actually up, like the profit line was sort of slightly down. So if the revenue line was down, that would probably concern me more, because I think most of that sort of healthcare industry is sort of struggling with sort of trying to contain costs here. So like every other industry, they'll manage to sort of bump them up. And, but the revenue line is probably more important for me, that it's still pretty robust there. So I do like this one here. I think there's some good signs. There's some great geometry there. So just sort of one that probably hopefully sort of will build over time here. Might look to sort of, every time it weakens off here, might be one to look at there.
Okay, well, moving into a different space in the market, Australian Clinical Labs, ACL. So, still the medical side.
Yeah. That's not so different, but a little bit different. Yeah. So,
So, look, charts still on the slip. So it's come down from sort of like mid-sixes. Now we're sort of mid-twos, but we've had a false break getting towards those low twos. Undercutting the lows that we saw, coming off similar things, almost April highs, but a little bit before it, through to all October, sort of trolling that out, and it's rally, but then quickly came off throughout the earlier part of this year into that false break. What's this behaviour telling you now out of that recent low?
Yeah, look, so it's a pretty mean downtrend. Obviously, the healthcare sector's been on a bit of downtrend here for the last 2 years there. But we just sort of saw a bit of a aggressive sell-off into that last low. And again, just no follow-through. So we saw a bit of a reversal there. And now we've sort of got a bit of a false break here. So we've gone to a new low, not followed through, reverse the following week. And we managed to sort of hold that. We're starting to see volume starting to increase as well here. So signs of accumulation taking place there. So it's not probably the hottest, strongest looking chart there, but we're just starting to see, I think, FPH the other day, Bishop Michael had a bit of a jump on, sort of gave some guidance there, which probably was a bit better than expected. So the stock had a bit of a jump as well. We saw Rams obviously give an update as well and had a bit of a jump here. So just starting to see some of these healthcare names starting to show a little bit of something, a little bit of strength. So starting to sort of move higher, move up strongly. So yeah, just starting to see a few little false breaks here, and just some sort of stronger signs there. So it is a sector, I think. Before sort of COVID there, Chris, I think it was probably one of the top performing sectors for about 3 or 4 years on the road. So COVID's been pretty harmful, since sort of 20 there. So probably 3 or 4 bad years for healthcare. Still got an aging population there. Still, I think it's a reasonable sector here. Just, just a sector that could potentially sort of turn here and have some better years ahead. So just starting to see some positive signs across quite a few of the healthcare names there. So that's pretty good for the sector.
Okay, so moving from the healthcare now into a different space. I was one ahead there with sorry, not yet. Still ResMed, but Orica. I was getting rid of Orica. So ResMed, similar thing in that space, but a very different pattern. So you talked about the April highs. That still seems to be similar, but the behaviour out of that movement and since then has been dramatically different. Huge drop off. And then if we zero in or really concentrate on the notes that you've got here from October 23, you've got 0, 1, 2, 3. Now, remembering this is a weekly chart, so it is harder to see, but possibly more on the daily. What's happening here that's...
so we had a nice base build there. We had probably got oversold on some of those Ozempic, some of those, weight loss drugs and stuff there, which, really, realistically is not going to be the long-term solution there. I still think there's some signs, I'll often see different side effects of those things as well. So I just don't see that being a long-term answer there. And so far, it hasn't really affected ResMed so far here. So pretty confident to see a bit of a bounce here. So we've had a pretty strong run here, Chris, but we are reaching really what I consider to be the first really strong kind of resistance point. So I did sort of have a pretty heavy weighting around 10% here. Sold the sort of first lot into those sort of up around 24%, and I've sold the second parcel around 25 here. The last parcel I'm just sitting sort of slightly higher here, just under 30 there. I'm sort of hoping to be out of that, very soon here. So I think, it'll probably pull back here. But look, it hasn't shown too much weakness so far. The pullback that we did see the 3 or 4 weeks there wasn't a lot of selling in there, and then we've seen pretty much sort of strength again. But I just noticed that 30 is that's a bit of a swing low on the way down. It was a swing high on the way up previously, prior to the top as well. So got quite a few important sort of touches around there. So so I do like that. I just think it's just a bit of a key level here. So I'm looking to sort of probably cash out here. Hopefully it'll pull back and maybe, what I'm hoping will happen is that the market will pull back and maybe ResMed will show some relative strength, Chris. So maybe not pull back as much as the market, maybe hold up. Then we can sort of come in and then push in there. So those levels that they can be important there in the short term. You might get some resistance there, then you eventually sort of break through later on and so. But look, it's been a great trade here. I just think it's probably, for me, just time to cash out here with the market where it is as well. And then, potentially we might be able to come back in here. So there's a few other healthcare names that look quite good. So, so I'm still looking at some of those as well.
Well, that's definitely a solid trade and a nice one to take with markets movement. Looking to Orica now, different space. We do cover a lot of healthcare. This has edged over that what has seemed to be resistance. It's sort of almost 4 touches over, if you look at this period of time, for the last couple of years. So a sideways channel, it's finally been broken. Actually, it's been edging up. So I don't think you've circled the volume here. So how and why is that significant with this part of the chart?
Yeah, so obviously Orica sort of made an acquisition there as well. So I've done a bit of a cap raising there. So oftentimes that might be a bit negative for us there normally. So I might put a little bit of pressure on the share price there, but we haven't seen that here. Actually, we've sort of seen quite the opposite there. It's been fairly robust. I know the market's pretty hot, but there's still plenty that have pulled back there on raising and stuff there. So this one's been pretty robust there. So I think their sort of chemical companies are sort of coming out of a, sort of period of consolidation there. So I just think this looks pretty positive there. We're sort of, broke into a new 52-week high. Good volume there, pretty strength there. So I think this is quite strong here. So any of my clients that actually had Orica there, I suggested taking the SPP up there because I think it was quite a bit lower. It's around about 15.50. It's quite a good price there. So so I think it looks pretty good. Looks pretty buoyant to me, pretty robust there. So I can't see any negative about this one here. So
yeah, well, that's one to watch for sure. Block or square, SQ2, So taking over the old ice.
I was looking for the square. I couldn't find the square. All I could find was block. So, it obviously changed its name. But yeah, it's broken out again. Similar story, broken out 52-week high. Yes, some reasonable volume there as well. The break held pretty tight here. Had a little tiny throwback there, but not much there. So, we know sometimes when they break out like this, they continue to keep going there, Chris. And that sector has been, as much as I'm not a big buy now, pay later there, the sector's been pretty buoyant. And we're seeing Zip, it's had a cracking runs. Some of the smaller names, as well as some newer names, have actually had some pretty good runs as well here. So definitely, the sector's definitely in favour here at the moment, showing relative strength versus the overall market there. So nothing negative here so far with the stock here. It's managed to sort of break through. You do occasionally get a little throwback on the daily there. But yeah, it looks pretty solid here, so I can't see anything negative as well.
That's moving constructively through the Solvar, SVR, so the automotive finance company. As you know, a very ugly downtrend for an extended period of time. These are the weekly charts. So yeah, this is an extended period of time, sure. Car sales are still, car prices are still low. Second-hand car prices are still low, but
that's probably only negative versus the industry has been pretty robust. The second-hand car market's been pretty down. So how these guys aren't hitting it out of the park here, automotive finance there, that's probably the biggest mystery there. But yeah, pretty mean downtrend. Just notice that it's sort of gone to a new low here, sort of kind of washed out there as well. And we have seen some sort of volumes there, but probably a bit more riskier than normally. I do like to sort of see stocks in that sort of slightly, my personal trading rules is probably just to sort of stick within the top 200 there on the, but I think SVR does make the 300 list. So still one of the bigger names there. Just had a bit of a negative on there, but oftentimes there's false breaks here when they sort of break to a new low and reverse there. It's often where they can have a turnaround then. The volumes were pretty heavy at the last low, and they're sort of heavy again here at this low. So yeah, definitely one to sort of keep an eye on. But yeah, it was one for me to sort of just do a bit more homework on there, because the price action is just indicating that we might be sort of seeing a little bit of accumulation down at these lows here. But I say it does come with a bit more risk than some of the others here, I'd say.
These definitely ones worth investigating, because we do know from history that markets do bottom, stocks do bottom, they do turn the corner, and as you've been analysing for quite some time, the behaviours that they really show us when they're here, and it's at this point where they're doing the false breaks, that you start to get the alarm signals to tighten your senses and really zero in and focus on, okay, well, is there that things that I'm reflecting on the last couple of weeks, a change of character or a 0, 1, 2, 3 bottom? What other things are you looking for when you see a sort of a turning point or a point of inflection in a low like this?
I used to sort of see those retest the lows there, Chris, and if I saw heavy volume on the last leg down there, that was always a bit of a concern for me. But I noticed that I think Aristocrat and also maybe A2 Milk as well, when they made their sort of false breaks here in the last year or two, that they were on heavier volumes, but then they didn't follow through, and then they reversed, and then those ones have been pretty strong moves. So if we see heavy volume in the last few weeks into the low there and then a reversal there, that basically tells me now not to get worried about that. That's often been quite a good sign rather than a bad sign here. So, but yeah, like any sort of strategy there, you got to have your risk reward there. But yeah, this one, it looks interesting here. Obviously, it is in the 300, so it's not a small cap here. But yeah, obviously the stock has had a pretty negative decline there. So, but we're seeing some of these bigger names, they do recover there. So, yeah.
Well, we have seen it, and you just talk about it as in taking profit. So, ResMed, again, a weekly chart. Was it this 0, 1, 2, 3 behaviour that got you? We can go back through the video, so it was quite some time ago, sort of 6 months or so, when it was rounding out. So that's sort of highlighting why you look at companies like this to really understand the behaviour.
Yeah.
What was it that was catching your eye back here, the ResMed, as it was making its way through this volatile and high volume period?
Well, I sort of thought the opportunity was pretty good. When the whole thing got slammed pretty hard there, I did sort of buy some a little bit on the way down there. We had got stopped out sort of, I think, once there on the way down. Did sort of wait for some sort of little false break there, which came through on the second attempt there. So I got a little false break there. Did sort of load up then, but then I sat through. They had a bounce pullback, another bounce pullback. If I'd probably just sat and waited for the 0, 1, 2, 3 to set up, probably would have avoided just sitting in there for an extra couple of months. Would have paid slightly higher price there, but avoided all the card. So yeah. So let's say like the false break, can be good signals there. Sometimes they can come out of there hard, but oftentimes they will build out of there. So waiting for that sort of the second or third sort of higher low gives you a little bit more sort of safety there. You tend to avoid a lot of the chop there. And we've sort of seen it with IGO, I think Orica and like S32 here recently. Some of those, they've been chopping around as well, around their lows and stuff as well, coming back and forth. So, so I know sort of sometimes I might sort of come in there like a little bit of false break there, but oftentimes I'd say a large percentage of them do a bit of building first there. So, for me, ResMed was a big lesson in that, rather than try to pick the low here or the false break there, you probably start with a smaller parcel there and then build into that position there each time it makes a sort of higher low there. And then, once you've sort of got your base built there, then that's usually when that was the point where the stock really took off. So the daily did a lot of up and down, building high lows, and then after the third, fourth high low, stock took off. I think the ASX did something similar, Chris, as well. Like it spent a lot of time building. Ramsey sort of done something similar as well. So those 3 or 4 high lows. So, just keep, rather than rush in there and sit in there through all the chop, maybe we're better off being patient, waiting for the building process, and then come in after that sort of second or third sort of high low there. So there's a reason why McLaren like that 0, 1, 2, 3 pattern, and I'm definitely starting to want that a lot more. So you don't always see it. Sometimes the bases come out can come out of the V-shaped low and keep going higher. You might get a follow through day where you might get a very big up day, more than 1% up a big volume, and then just go and just keep going. But if it's pretty choppy there, the building process is what we're looking for there.
But really useful insights to understand how a position that you are currently taking profits on and exiting, sort of your mindset, and as you reflect on the trade, how you would have traded it differently on the entry, and using that time value of money concept as in, well, I could have been better off waiting for a higher entry, but better from a portfolio perspective, and using that to understand the current trades that you've just put forward for us. And I think to that point, we'll say thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.